Suzanna Martinez here, your PEO for the CO. Today, I have a special guest. Him and I go back many years ago. Knight Hinman, he's with BSI. And we used to do a lot of networking together, and we were in a lot of circles and groups together. So I'm so excited to be able to partner with him. I've known him for many years. And we actually had a great conversation talking about company that I had that had 10 employees and 100 1099 contractors. So today we're going to be talking about W-2 employees versus the 1099 contractors. And Knight started talking to me, and I'm like, you're just preaching the choir. I already know all this stuff. This is something that most businesses really don't know the difference between 1099 versus W-2. And I said, let's just take this on recording. So that's what we're doing today. And Knight, what I'd like for you to do is just introduce yourself a little bit.
Thanks, Susanna, so much. I appreciate that. My name is Knight Hinman. Again, like Susanna said, I work for BBSI, which is Barrett Business Services, Inc. We are a PEO, and so we work with small to medium-sized businesses. We have about 8,500 clients across the country. We've been in business for 70 years. We're a NASDAQ-traded, publicly traded company, and I started as a sales guy here in Colorado about 8.5 years ago, almost 9 years ago, and about 3 years ago moved into the area manager role where I manage the office here in Denver. And then recently they folded the Colorado Springs office into my branch as well. So I'm over 2 offices. I have 3 teams of just wonderful folks that work with our business owners, helping them on things right along these lines. I've been in insurance for over 25 years, both on the carrier side and on the broker side. So they brought me here really for my understanding and my geekness that I have with workers' comp. And that's where kind of this conversation here started with Susanna.
Yeah, so why don't we just talk about the company that I was referencing? He had 10, I think it was some type of contracting company. He had 10 employees, W-2 employees, and 100 contractors. And he really wanted to take advantage of the large group health insurance. And he had already started doing some research before he had come to me. And a lot of PEO companies just wouldn't touch him. One, because each PEO wants to do their full due diligence. And he just didn't quite understand how the 1099 contractors affected whether they were going to get approved for the master health insurance or not. And why don't we talk about how your company looks at it?
It's an interesting thing. We're seeing this more and more as companies looking to cut costs. There's so many employees nowadays that are, there's so many employee-ready folks out there who would rather have the flexibility of being an independent contractor as opposed to a W-2 employee. There are some where there's tax savings, potential work comp savings, right? But I think the majority of them are just business owners that need to work. They have a job to do, they have orders to fill, and yet they can't find the people who want to become W-2 employees. So they turn to the 1099 situation, feeling like that will solve their issue. The problem is that it brings in an awful lot of compliance and regulatory issues that they may not even realize. And it stretches from the workers' comp side of things, where you have carriers such as state funds in different states that say, no, these people are not 1099s. It doesn't matter if they signed a piece of paper indicating that they are. The fact is that they meet the qualifications of an employee, of a W-2 employee. I like to say if it walks like a duck and quacks like a duck, Susanna, it's probably a duck. And if they're directing where they go to work, if they're wearing their shirt, that's a good one. I can tell you a story about that if we want to circle back to that, where that kind of bit one of our clients. If they're using their tools, if they're being trained by them, these are all things that the workers' comp companies will look at and say, those are actual employees, and you have to pay for the workers' comp on them. And from a workers' comp perspective, the reasoning there, Susanna, is that the carrier is likely going to be held liable for an accident that would happen. Because say you have a 1099, they're out on the job site, they signed the paperwork saying they're an independent contractor, they signed the paperwork saying that they do not need to have and are not covered by the workers' comp, they fall off the ladder, and invariably they don't have their own health insurance. So what do? They go and make a claim under their workers' comp for that company. And the problem is we've got systems that are set up to favor the injured employee. And in some cases, once again, that's a good thing. The problem is that the carriers aren't receiving premiums for those folks because they're not paying the premiums based on them not being a W-2 employee, but yet they can be held liable for that claim. And we see it happen quite often. So that's the workers' comp side of things. Then you go through to the Department of Labor side of things, where you've got regulatory body of the Department of Labor saying the same thing, saying these people are not independent contractors because of those qualifying factors that we brought up, and there's many others. These people are employees and should be labeled and categorized as employees. And then you have the IRS that says, wait a minute, we want our piece of the pie. You can't cut us out because as an independent contractor, remember,
IRS always wants to get paid.
That's right. That's right. They're not collecting the employer responsibility taxes, such as SUTA, FUTA, Medicare, and Social Security tax. And so the IRS is the scariest one, Suzanna, because the fact of the matter is that the IRS can come in and they will shut a business down. They will go back years and audit them and say you owe hundreds and thousands of dollars of back taxes and literally can shut them down. From a work comp perspective, the carrier will come in and audit and give them a bill, which I've seen six-figure bills come in to a company that did everything right, but the auditors indicated, no, these are not 1099. Sorry, these are W-2 employees, and you owe us X amount of dollars for their wages or the premium.
Yeah. I've heard of many stories like that over the years as well. So number one, IRS is going to be the biggest problem that you're going to have if these 1099s are not legitimate 1099s. The Department of Labor, number two. The insurance for workers' comp of not paying premiums. And if somebody gets hurt, you can't offer health insurance to a 1099 contractor. They have to be a W-2 employee. So this company he just wanted to offer just the 10 employees the health insurance. But then there's the PEO company looks at it, there's just too much risk. The chances are out of that 100, there's legitimate 1099s, yes, of course. But 100 1099 contractors? Come on. How legitimate was that if an auditor was to walk in the door?
That's right. Very unlikely. And as a matter of fact, we're working with a company currently, Suzanna, up in the mountains here in Colorado. And this particular situation is very unique in the sense that they can't find workers up there. This is a drywall company, and they can't find workers up in this area of town or the state. And what happens is these workers go from company to company. So whoever gets the contract, whatever company gets the contract in that area, all the workers come and become 1099 workers for that company. Then the next company gets the contract and all those workers come and do that. It's a misuse of the 1099 situation because, as you said, there are legitimate uses of 1099. We have lots of companies who legitimately use 1099, and we're happy to work with them when they do. But this is a situation where, unfortunately, like you said, they've got 75 guys and gals that are 1099s going to work for different companies and only a handful of W-2s, but they're doing the same thing. They're at the same job site. They're using the same tools. They have the same training. They're told to be there at the same time. They're getting paid a check in their name. It's all these things that these regulatory bodies and insurance companies will point to say, no, those are not 1099s. Those are W-2s. And we had to do some education with this employer. And there's empathy there, right? We feel sad, sympathy, I should say. We feel sad for them because this is the situation they're in, but in order to keep their company running, this is what they have to do. So we are working with this company. We brought them on as a client. We're working with them to ensure that they've got good risk transfer in place, the paperwork that they should have that ends up being our first line of defense against a workers' comp claim. And then making sure that we're educating them as to where they can move people over from 1099 to W-2, and they're doing it. And it's a hard and maybe a long process, but we want to work with them because you know what, Suzanna, and I know you agree with this, Jesus didn't come to heal the well, he came to heal the sick. And we're here to help those sick folks out there who are in a situation, may not even realize that they are. We want to help them.
I couldn't agree more. You have a lot of compliance and regulations that a business is just opening up themselves to. And we understand that it's very difficult to get people to come and work for you, and you have to be creative and think out of the box. But you need to always be mindful if an auditor was to walk in Is this a legitimate 1099 contractor or not? And that I was looking at the list of the IRS website because I remember they used to have this like extensive list. It was like 20 questions. If you answer yes to any of those questions, it is a W 2 employee. And I couldn't find it, but I remember, I'm sure a lot of the questions too. Are they having a set schedule? Are they wearing company equipment, t shirts? Do they have other jobs that they work for? What were some other ones that can you
Does the company provide training
does the
for
company
them?
provide training? Yeah.
Do they provide equipment and tools for them?
Equipment, tools, there you
Um,
go.
yeah, those are a couple. Now that list is much shorter than it used to be. It's only about 6 or 7 questions now.
Okay.
But the problem is that then leaves the door open to a lot of gray area. And I think that's where the confusion lies, is there is a lot of gray area. BBSI, we put together a list, and it's about 30 questions. And look, it's not if you answer yes to any of them, but what it creates is an ability to ask these questions. And if
Additional
you're
questions.
answering, yeah, if you're answering the negative way, because some of them are no, right? It's not just yes. Some of the answers are no, and it's a problem. Basically, if you're answering in a negative way or pointing towards the fact that this person is a W-2 as opposed to a 1099, if more of your answers point towards that, then you better look at it. And once again, there's gray area. It's really not a black and white thing. It's not, and that's the problem, I think. And that's where there's fraud and some things that happen out there that shouldn't happen because of that, because there's gray area. But our job as consultants with these folks is to make sure they understand what the laws are, they understand what the penalties might be, they understand the risk they're taking when they do this, and what's happened in other circumstances. So we tell a lot of stories about unfortunate situations that have happened. And I'll go back to the one that I mentioned earlier. We had a client who had somebody on site repairing one of their trucks. And this is a person who's a mobile mechanic. Certainly, to me, it seemed like they're a vendor, right? That's a vendor. It's not like a vendor you have to get a certificate of insurance for or sign a subcontractor agreement, because they're really not a subcontractor. They're simply a vendor that's coming, like a plumber would come to your house and work on your house, right? But this was a mobile mechanic. He would work with other companies like them as well. So he met that qualification, and he had been there a few times. He'd worked with this company for years and asked them, hey, I really like your t-shirts. Can I have a t-shirt? And they gave him one. And he came to work one day on their trucks wearing their t-shirt. Sure enough, he got majorly injured, a compound fracture of his leg. And it was a 6-figure claim. And they took a picture of him in the ambulance wearing the company t-shirt.
Oh, so he did it. This isn't a
so
t-shirt that he wore on a regular basis. It was just like,
nope,
just let me wear it and help you
happenstance.
market. Yeah, wow.
That's right. It was happenstance. Like you would ask, you might have, I have a hat probably from one of my clients sitting on my desk over here.
Yeah,
that
you're
have.
helping
And
market. Yeah.
if I wear that hat, that doesn't mean I'm an employee of the company. But unfortunately, this gentleman got injured. Picture was taken of him in the ambulance with that company shirt on. And just because of that, the judge ruled against us, and we ended up paying that claim.
Wow. How much was it?
About $150,000.
Wow. Did he also have to go back and collect premiums for workers' comp and unpaid taxes? Did they turn that person into a W-2 employee?
The problem with us specifically, Suzanna, is as a PEO, and we're a self-insured PEO, so we have a very unique program here, but we can't collect premium on anybody other than a W-2 employee. We're not able to. Unfortunately, no, we could not. This is a longtime client, paid us a decent amount of money over the years. So we're still in a position where we're positive on the account, which is good. But the client knows, look, this was a mistake that was made, and we need to be careful with this kind of thing. And they realize it was an accident, but it just goes to, I think, underscore how the legal system looks at this and how careful these business owners need to be with, and judicious they need to be with the use of 1099s and even vendors, like in this circumstance. And there was one other thing. They used, the mechanic didn't have a certain tool that day, and so they needed to use their tool that they had. So it again just underscored it. It was just, hey, yeah, use my tool because yours isn't working or you don't have one, and you're wearing my shirt, and you're on my facility, and bam, there you have it.
Wow. So going forward, did they turn this vendor into a W-2 employee?
No, because
It wasn't.
he's
It
got
just
his
so
own
happened
company,
that day he just happened to use this tool, happened to put on a company t-shirt.
and that's how quick it can happen. Now, the majority of these things happen again when somebody is using a 1099 where they shouldn't be, and the person gets injured, the Department of Labor side of things, I have instances where a disgruntled employee, right, a disgruntled 1099 calls the Department of Labor and says, yeah, this company is using 1099 contract labor, but really these are W-2 employees, and here's why. And so then the Department of Labor comes sniffing around. And usually, whether it be OSHA or Department of Labor, most of those claims come from a disgruntled employee. You just never know when that's going to happen.
Yeah, I've heard of 1099s trying to file for unemployment. And they're like, wait a minute, why are you trying to file for unemployment? You are a 1099 contractor. And then they're like, actually, I don't see
Right.
myself as a 1099 contractor. I've seen examples as well where it's actually shut businesses down, where they've come in, the IRS had come in to do an audit and then made the employer pay back taxes, FICA, FUTA, SUTA, workers' comp premiums. And depending on how long this happened, how many employees, what the payroll is, it could put a business under if they don't have the cash to pay that.
Absolutely. And that's where we have to be very careful, Suzanne, as we discussed, because unlike a carrier, right, a workers' comp carrier that does an audit at the end of the year and can look at all the books, look at all the receipts, look at all the payouts and say, wait a minute, this isn't right. You owe us this money, and they're responsible then to pay, right? When those auditors come in and say that, you either pay it or they'll tell you to pound sand, right? You're fired, and now good luck going and finding another carrier that'll take you on. We're in a position because we're self-insured that we don't do audits. So we can't come in and do that. So again, for us, we have to be very careful and very vigilant when it comes to 1099. Now, we get stuck sometimes, and there's just, hey, it's the price of doing business, right? We can't avoid it sometimes because we can't be at every client's job site policing, are you an employee?
Yeah.
Are you on our payroll or Knight? And
Yeah.
not allowing them on the job site. We can't do that. We've got hundreds of clients here in Colorado. But we just work very closely, our risk managers and our HR managers work very closely with our clients to ensure that, again, they understand the laws, that they understand the risk that they're taking, and really they understand that, look, if we end up paying this claim, what do you think is going to happen to your rates? I do control our rates with our clients, and if we end up having too many claims from a client, then we're forced.
It's going to affect
to
everybody
raise
else.
Yeah, and we don't want to do that, but sometimes
you don't want to take undue risk. So, any other stories that you can think of where you've actually helped a client?
I'll tell you. Yeah, I would say that right now, I think the biggest help, Susanna, that we're providing our clients is really maybe not as much on this side, but it's still a compliance thing. It's all the HR laws, right, that are coming into play. And they're coming in all over the country. I don't know if it's the coasts, the water that people are drinking on the coasts, but they tend to come from the East Coast and the West Coast and bleeding into other parts of the country, and we're one of them. Colorado being a very purplish state, we have quite a lot of these California laws coming here, such as the Family Tax Act, which is the Leave Act that they have here now, where it starts January 1st, and
all employers or just a certain number? You have to have a certain number of employees. Is it like 20 plus employees?
No, it's actually just every employer, but tax side, the employer only has to pay if they have 9 or more than 9, I should say.
More than 9. Okay, but that's majority. Yeah.
Yeah, and it's a pretty low threshold. An employee only has to have made $2,500 to qualify for the family leave. And it's basically where they can have 12 weeks paid off, and the employer has to hold their job while they're gone. And it's for any sickness, any family sickness, pregnancy, and a few lists of other things. And so this is really scaring employers, because you can imagine if you have 10 employees and on January 1st, 2 of them come to you and say, hey, I have to be gone for 8 to 12 weeks. And by the way, you have to hold my job. They don't pay them. It actually comes out of a state fund, which was created earlier this year, where the employer pays some of it and the employee pays some of it, and it goes into a fund. So it's paid out of the state. The problem for the employer is that they lose maybe a key or a percentage of their employees, and they have to hold their job for them. So they can't get a new person in there. Right. They can backfill it with a temporary person, but that's scaring a lot of employers. So we're working overtime, really educating our employers as to what this looks like, and helping them with contingency plans, what they're going to do. And there's other HR compliance type laws that are coming into play all the time. And the thing is, these poor employers are just inundated with regulatory bodies that are out to get them. I like to say that owning a business is probably the loneliest job in the world, but it's everybody's out to get you. And that's why you do what you do, Suzanna. That's why I do, and my teams do what we do, is to help these employers with the mire that they find themselves in and give them their courage back. That's something that we say around here, that we like to give an employer their courage back, because so oftentimes they lose it because of all this regulatory mire that they end up in.
Yeah, sure. I always say, even if you have 9 employees and they're all spread out in 9 states, that's 9 states of different compliance. And with everything changing every year in the different states. So listen, if anybody has employees in Colorado, you need to be aware come January, this is a new family medical leave that Colorado has
Yep.
passed. So how are you going to
Yeah,
handle
it's one
that?
of many.
Yeah,
Yeah,
one
it's
of
one
many.
of many.
And I know another one was the mandatory 401k, offering 401k
Mhm.
to employees.
That's
Was that
right.
a
That's called
threshold?
sorry. It's called the Colorado Secure Savings Act. And if anybody with 5 or more employees has to offer
Wow.
either a 401k.
Very low threshold again.
Yep,
Yeah.
absolutely. Or they have to go into the state plan. The state has set up a plan. The problem is it's like the Family Tax Act, Susanna. Unfortunately, when you put things in the hands of bureaucrats, the state feds or whatever, it ends up being a mess. We have a 401k plan that we have for our clients. So we've brought a significant number of our clients onto the plan. We don't charge very much for it. We really do it as a courtesy to help them. And with this Colorado Secure Savings Act, and there's other states that have enacted this sort of thing as well, California, of course, being one of them. I think there's probably a dozen or maybe 15 states that have enacted this. And it's a good idea, right?
Right.
The reasoning is, look, we want to help people save because people aren't saving enough, and they end up with nothing at the end of their career. And so the thought behind it and the idea is good. The problem is that the implementation sometimes isn't that good, and they put a law in place to maybe solve a problem that might not be the best solution. But that's now done, and so everyone is required, every employer with 5 or more employees is required to either offer an IRA or 401k plan, or they have to be in the state-run plan. We did our best to educate our clients this year, because it went into place this year, as to here's the state plan, here's our plan, and here's a third plan, so that they had options. We really want to give our clients options. Most of them did.
What is the minimum contributions? Sorry. What are the minimum contributions?
I'm not exactly sure. Yeah, I think it depends on the type of plan, whether it's a safe harbor plan or whether it's not. And so there's some questions that have to be answered in there to figure that out. And again, we have a team that kind of helps the client figure out what they need.
Okay. So we've talked about workers' comp, we've talked about compliance, we've talked about auditors, we've talked about the IRS, new state laws that are passing every day. How do employers manage all of this outside of a PEO?
I would say pray, but I'm not sure people pray. I think that's why Colorado is in the top 10 growth states for PEOs, Suzanna, because they can't. It becomes very difficult for them to, especially you mentioned this, that when you have an employer, a small employer, who's now employing people in other states. Because now, look, we're virtual, right? You and I.
Everybody.
You're sitting somewhere in the country, I'm sitting somewhere in the country, and here we are having a meeting and talking. And this is the way business is now. It's normal since COVID. Yeah, sure, it was done prior, but now this is the norm.
Absolutely.
And so companies hire in other states because, look, it's expensive to live in Denver. So they can hire somebody in, I don't know, Kentucky somewhere where it's less expensive to live. They can pay them less, and they can still get the job done, as well as someone based here that they have to pay a lot more for. And that becomes a burden for the employer to try to figure out what are the laws in that state? How do I apply for a state unemployment tax account? Do I need to have a business registration there? These are all things that they're calling their attorney, right? Or they're calling their CPA.
And they're getting charged fees for this. Yeah.
And so again, I think that's why we continue to see growth in the PEO space, because I was a business owner 25 years ago, maybe more, 30. And I'll tell you, 30 years ago, it was a whole lot easier to operate a business than it is today. Yeah. There's just so much being thrown at business owners from so many different aspects in so many different ways. And again, there's so many these out there to get the business owner, right? It's the business owner against the world. And to have somebody like yourself, right, to have a company like BBSI or one of the other PEOs, many that are out there behind them, I think, look, if I like to say that if I knew that BBSI existed back when I owned a business, I might still be in business, because I got out of business for what we're talking about, because I just couldn't. For me, it was more the employees, right, handling all the personality, 25 different people that would come to me every day and need me to be banker, father, pastor, lender, whatever it is that you have to be as a business owner. And I enjoyed running my business, but I
What kind
didn't
of business
enjoy
did you
all of
have?
it. I had two. I started out with landscape contracting out of college. I had a friend that was a landscape contractor, and we built a lot of backyards and sprinkler systems and things like that. And then I sold that business and got into the retail car business. So I had my dealer's license, and we sold cars and service cars. We had a lot down on Broadway where all the small lots are down there.
Yeah.
And we did towing, and I had about 25 trucks, maybe 35 employees, and 150 headaches a day. And most of them were from the employees.
I'm sure any industry,
Yeah.
that's what they're all going to say.
We hear it every day, Susanna. You and I, we're in the thick of it, hearing it every day from these employers that need the kind of help that we bring.
Yeah.
And look, there's a lot of different options out there. You're tapped into a lot of them. It doesn't fit everyone. Not one size fits all. You have to really do your due diligence, see what it is that you're looking for, what it is that you're experiencing as a business owner, the issues that you have, what you're looking to solve, and try to find the right solution.
So good point. So you talked about towing. So that's a certain industry that a lot of PEOs will not have an appetite to write that business. So talk to us about what type of risk you guys like to take as far as a workers' comp underwriting standpoint.
Yeah, no, thanks. I appreciate that. We're very unique in that. We like blue collar. We like those men and women that roll their sleeves up and get dirty and have boots on the ground and pour concrete. We like that. And I think we like it for two reasons, really. One is that you have a business owner who had a skill, right? They knew how to swing a hammer. They knew how to build this beautiful office in here. And they said, why am I working for this guy or this gal? I'll go start my own business. And so they start their own business, and everything's great. They have their brother, their mother, their neighbor working for them. But then all of a sudden, they have strangers in there. They start hiring more, and they have these people that they don't know, that they don't trust. And the business then becomes a little bit more than just this grassroots out of the garage business. Now they're running a business, and they don't know how, because they've never gone to business school, right? They've not done that. They had a skill, and they went out and started that company. And we come in to help them with all that stuff that they may not be able to, do themselves. So that's one reason why we really like blue collar, because we can come alongside these salt of the earth people and help them. The other part of it is that these folks need to have safety, right? They need to keep their employees safe. And one of our team members is a risk manager that comes alongside the business owner and helps them identify a safety champion within the organization, help them with safety training, any kind of policies and procedures they need to be put into place, like the HR side of things that most PEOs do. What they don't do is that risk side, and we know it very well. We've got very talented risk managers that can help them deal with that risk. And the fact of the matter is that like you said, a lot of PEOs don't understand blue collar. They don't want to write that kind of risk. And we found a market in there that we're able to cater to. And we bring a self-insured workers' comp program to the table for them, which can be very advantageous as far as no audits, pay as you go, the EMOD fluctuation that companies can have, the experience modification fluctuation people can have. We shield them from a lot of that. And so the kinds of businesses, it's easier to say the kinds of businesses that are tougher. I think we can write anything.
You don't have an X list at all?
In a sense, yeah. We're self-insured. That's a good question. We're self-insured, but we're backed by Chubb. Chubb is our reinsurer that we're required to have as a self-insured entity. They have some exclusions. They're really these high-risk things like asbestos abatement is one example, or explosives. They're working with explosives. Underground mining, commercial airlines, professional sports teams. So I know you work with the Denver Broncos, Suzanna. Sorry, I can't help you on that one. But they're really, the list is pretty short. We love the trade contractors of most kinds, your drywallers, painters, asphalt and concrete work, home builders, trim work, woodworking, manufacturing, trucking, transportation, warehousing. So all those kinds of things are green lighted for us. But it really comes down to, look, if it's a best in class and it fits, even if it's on the excluded list, we might be able to get it through. We're a nimble company. While we're a big company, we're very nimble in the sense of being able to move pretty quickly and make decisions at the local level that make sense.
I'll keep that in mind if I come across an explosion company that deals with explosives or something.
Yeah, those are dangerous ones.
Let's talk about the EMOD a bit, because you mentioned that slightly. So let's talk as those that don't know what their EMOD score is. It's like their business credit score. Yeah, for safety. So if you can talk to us more about what an EMOD is, and if an employer has a high EMOD, how would BBSI help them?
Great question. And really, there's a few factors in there. So the experience modification factor that you're mentioning is there's about 35 states or so that are under what's called the NCCI, the National Council of Compensation Insurance. They're the ones that promulgate this experience mod for companies in those 35 states. And then there's some other states that have their own. California is a good example. They have their own rating bureau. But bottom line, what this is, any company that's been in business for at least a few years and has a certain level of premium is assigned a modification factor which goes against their workers' comp rates based on their losses against others in the same industry across the country. So to make it simple, if I'm a plumber and I have losses that are equal to other plumbers across the country, then my modification factor might be a 1.0, meaning there's no addition to my workers' comp cost and there's no subtraction to my workers' comp cost. Now, if my losses are above the average losses for plumbers across the country, then maybe my modification factor is a 1.5, meaning if my workers' comp, if I'm paying $1 for workers' comp, now I'm paying $1.50 for workers' comp. On the flip side, if my losses are below, then it might be a 0.75. That means I get a 25% credit on my workers' comp cost, okay? So any company looks at that, or all the insurance companies are required to utilize and to use whatever modification factor a client has. Now, I'll tell you too, that this is a 3-year rolling window that they look at. So if you have a loss in this year, it's going to stay with you for 3 years, even if that loss isn't your fault. Take, for example, a non-fault auto accident, right? Auto accidents are a big cause of workers' comp injuries out there. If your truck gets hit by another vehicle, it's the other party's fault, your workers get injured, that is a workers' comp claim on your workers' comp dollars. You're going to pay that comp claim. Maybe your insurance company will do what's called subrogation, go back after the other insurance, get money back. Problem is that costs money for them to do that, and it takes a long time. And you're going to suffer the cost of that in the meantime. Now, what we do, BBSI has a very unique program that allows us to be outside the jurisdictional bounds of these rating bureaus. So what we can do is, if someone is a 1.5 mod, and I hear this a lot, this happens often, where again, it's either a one-time loss, like just a shock loss happened, or a not at fault loss. It goes onto their experience mod. Now their experience mod goes up. We can take a look at that and say, you know what, that 1.5 mod really isn't indicative of your safety program and your overall losses in the time that you've been in business. We feel that you're a 1. So instead of that 50% charge, we'll knock that off. And we're the only PEO out there that's able to do that.
Okay. Interesting. So if somebody had a very high EMOD because they had some type of shock loss, you would take a look at it and possibly even lower it and really look why it's such a high EMOD rate.
That's right. That's right. We're able to do it. And along with that, then comes that stabilization, right? Because you can imagine somebody's paying, this much, the same amount for their workers' comp, and all of a sudden, boom, it goes way up. And now they're paying more for their workers' comp. They didn't know it until 2 weeks before their renewal. They've already bid out jobs into the future based on current costs, and now those went up. We can shield them from all of that. Because under our program, again, their mod's not going to go up under our program. We're not required by law, like every other insurance carrier is, to do that. And if we do feel that their high EMOD is not indicative of their overall experience and what we would expect going forward, we can write it at a lower amount. Now, the flip side of that is somebody comes in with a really low mod, right? They've already experienced maybe some losses and they've taken care of it, or they've always been a safe company and their mod's a credit mod, we still give them that same credit. They still get that 25, 30% credit. We give that to them as well, but we lock that mod in. So they don't have to worry about a shock loss, raising that up and increasing their costs.
So that's a good point, because over the years, I've had companies that actually had a really good score and they were leery to join a PEO because they felt like if they were to join the PEO, they're going to lose their good EMOD score.
That's a really good question, Susanna, is on when someone does have that low EMOD, right? We had a company that I wrote about 5 years ago. They're a last mile delivery company, right? They did that kind of like HelloFresh or whatever, where they do that last mile delivery. And they had a really low EMOD, 0.65. It was one of the lowest EMODs I've ever seen. So they're getting a 35% discount on their workers' comp. And their concern was, if I come to the PEO, what happens to my EMOD? What if I leave in a couple of years, right? And the answer is, if they do nothing, what will happen is when they leave in a couple of years, because we're not reporting to these reporting bodies, their mod would be a 1. They'd be like a new business, because every new business, that's what their mod is, a 1, right? Until they have some experience. But there's a form that can be filled out with these rating bureaus that actually keeps the mod going while they're in a PEO program.
Okay.
So for somebody with that low mod, that's what we do. We work with their broker, their insurance broker, and we provide them the payroll by class code and the losses, because everyone stands on their own. It's not a pool, right? They're in their own individual program they have their own individual insurance policy under our program. We provide that information for that company. They send it in to the bureau, the rating bureau, and the rating bureau keeps the mod going while they're in our program. If they were to leave, they still have that EMOD.
Awesome. Knight, I certainly do appreciate your time. It's been a fantastic. Anything else you would like to mention as we wrap up?
Thank you, Susanna. I really appreciate the opportunity. One of the mottos that we have around here is that we're business owner advocates. And I really hope that what we've talked about today can help some business owners out there that are struggling with some of these issues. Reach out to Suzanna, reach out to myself. We want to help. That's what we're here for. And I really do believe that the model, the PEO model, is so beneficial for so many businesses, but yet so many people have never even heard of it. They don't know what it is. And so I love introducing it to folks. I'll say that I know Suzanna very well, and I certainly know my teams. We're very consultative. We want to learn. We're very curious. We want to learn where it is that we might be able to help. We'll be the first ones to raise our hand and say, no, what we have isn't what you're looking for. And Suzanna does a great job of making sure that she brings in the right companies to show her clients based on their needs. I enjoy Suzanna work. Yeah, I enjoy working with you very much and look forward to continuing that in the future.
Thank you. In fact, that's my slogan, your PEO advocate, fighting to maximize your benefits without overpaying in PEO fees.
Love it.
Suzanna Martinez here, your PEO advocate, fighting to maximize your benefits without overpaying in PEO fees. If you like my content, please hit the like button and subscribe or comment below.